Alright, good evening everybody. Still here for the Daily Market Pulse. Thursday, January 9, 2014. So a little bit more sideways to downside action once again. You still see the flag-like formation here on the Dow Jones still occurring, still kind of holding the 8-moving average as best it can, plus the series of lows, including the window that was established some time ago right across here. So far that's all holding for now. Very much an indecisive candle, as you can see, upper shadow, lower shadow, very much a spinning top. A lot of indecision leading up to tomorrow being the unemployment day, non-farm payroll, always a very important day, highly volatile typically. So all leading up to that. Everything looks very bullish. Everything looks like it certainly from this pattern could go to the upside, but you never quite know what's going to happen. This could just as easily flush to the downside below 16,400 and to the downside. The put-call ratio is extremely low still. Usually that means toppiness, but hey, with 6 distribution days in the bag, in the books, there's no telling. So let's take a look at the S&P. Similar to yesterday, although we made a new high and a new low, volatility was a little greater today, but you still see pretty much an open and close near the same location. Slightly positive today compared to yesterday, but very much another indecision day, as mentioned with the Dow as well. Everything again here still looks a little on the bullish side just because the trends are up. Everything's still above the polarity area at 1815, etc. But still closing above the moving average as well. So the trend is still up for now. We'll see what tomorrow brings us, and we'll see how that works out. Nasdaq next. Nasdaq important. To me, always a very important one to watch and follow. It seems to me that's the one that we have to pay always the closest attention to. You see the bearish engulfing high across here. It's finding resistance right there, and it did get rejected. A little bit of a scoop-like formation, so it could still mean that things could pop and go through into 4,200 and higher based on the formation. But there is some rejection, there is some resistance here, but with immediate support below at the other window below, just above 4,100. So again, interesting to see how they're going to take this through the night, how they're going to respond tomorrow morning, and then we go from there. Let's move on to the TSX for our Canadian friends. TSX once again a little bit higher, just kind of grinding its way higher with a new high today. Not too bad. Again, the whole pattern looks good. So if this is an inclination of what the other indexes might do based on the formation, then we might see higher prices. But there's no guarantee of that ever, that they all follow suit ever. So for now, we still wait for tomorrow. We see what happens. US dollar, Canadian dollar. Another strong day. The candle sizes, the real bodies are getting smaller. Usually means things are getting a little tired. Plus the rejection at the top, I would have to say sideways to possibly lower from here. Be very careful. 3 consecutive days outside the Bollinger Band. Very aggressive. It's great. It's fantastic. However, looking like it might be a little tired. The US dollar could drop here. That may coincide very well with tomorrow. We'll see what that brings with the US dollar lower. With that said, let's move on to Treasuries. Treasury is still attempting to break out of its old trend. This is going sideways off 128 with multiple bullish candle patterns. Again today, another bullish candle pattern with a new high and higher close. Looks pretty decent. Negotiating moving average is currently closing again 2 out of the last 3 days above the 20-day moving average. Everything looks pretty decent. Stochastic still overbought, however. We'll see if this has any kind of energy to get back to 130 and possibly higher. Otherwise, it may pull back down toward 129, 128, or pardon me, 128. It's already at 129 now. Gold, kind of similar, right? Could drop down, found support, 1180 to 1200, popped up a little higher, 1240, 1250, then retraced somewhat, and we're just consolidating and profit taking there for the last several days. Everything getting very small, getting very tight for the next refresh move. Everything seems to think, at least look and appear upside just because of kind of a rounded bottom-like formation. You might expect a kind of a pop toward 1250 in the 50-day moving average. But then again, it could just as easily drop into 1200. But right now, pretty quiet, and looks like I said, like more of like a profit-taking time period, which means after the run higher, that would mean higher prices once again. Let's see what happens. Okay, crude continued its descent, really truly testing 92 and slightly lower. Made a new low today, and then look at the gap higher right now. After the close and then close for about 45 minutes, it gapped higher aggressively into 92 and a quarter and higher. This It seemed like a likely place that we could see crude bounce from. It actually bounced earlier in the day and then faded a little bit before its own close, and then look at the gap higher it's had now. So this is a possible turning point for at least minimally a dead cat bounce. That dead cat bounce could pop up in the neighborhood of about 94. We'll see what happens there. Otherwise, a breakdown below 91.50. And you are going further south into about 89 to 88 even, for that matter. Let's go take a look at small caps. We know small caps is a risk on. So again, sideways below the window. Came into it yesterday, did the same thing today. Could not muster up anything to go through at all. But again, there's not a strong catalyst necessarily. That catalyst may be tomorrow. Is there enough to go through or not? Multiple tests of that area, not able to break through. Hard to say. Or is it going to break down with this resistance right at this level? We'll have to find out tomorrow. We'll see what happens there, so be cautious with that. VIX is our next target. The VIX was higher at one point during the day. You can see the upper shadow into the 8-moving average, and then of course it reversed. The markets went a little bit higher, pushing off its lower lows of the day as well. So nothing real threatening here, but still, that candle from a couple days ago on Tuesday, in my opinion, is somewhat revealing. It gapped lower and reversed quite significantly, held at the window, held at the 1250 mark, and it looks a little suspicious, so we'll have to wait and see how that responds. All right, I'll catch up tomorrow. We'll see what the unemployment numbers provided us.